The Economic Survey 2021-22 projected the real GDP growth rate at 8 to 8.5% for FY23. However, both the government and the RBI have moderated growth expectations for the upcoming financial year in the short time period since then. Last week, Finance Minister Nirmala Sitharaman said that the centre's GDP deflator projection for FY23 is 3 to 3.5%. What this means is that the central government's real GDP growth projection for FY23 is in the range of 7.6 to 8.1%. This is based on the fact that the union budget has assumed a nominal GDP growth rate of 11.1% for FY23. GDP deflator, which is a measure of inflation, is also the difference between nominal GDP and real GDP. Also last week, the RBI projected GDP growth for the next fiscal year at 7.8%, again lower than what the economic survey had projected. The survey's growth projection for 2022-23 is based on the assumption that there will be no further pandemic-related economic disruption, withdrawal of global liquidity by major central banks will be mostly orderly, the monsoon will be normal, global supply chain disruptions will ease as the year progresses, and oil prices will be in the range of $70 to $75 per barrel. So what are the economic headwinds that India could face in FY23 that have led the centre and the RBI to decide that the economic survey's estimates are a tad too optimistic?
Well, I think the economic survey laid out a broad range, and what we typically see is, I think it's early days to precisely predict what is going to happen in 22-23. There are too many risks floating around. I think the COVID is down but not out. Then there is oil prices, there is global geopolitical issues. And then I think there's also the Western advanced countries beginning to raise interest rates. So there are too many moving parts right now. So I don't think anybody can be very precise with the outlook for 22-23. And I think different bodies have come out with different estimates, but the gap between them is not too large, I would say. They're broadly in the same range.
The government and the RBI are also aware of the fact that lagging private consumption could prove to be a sore point.
Well, I think the government also acknowledges that the consumption weakness is there, and RBI also highlighted, I think, as you rightly said. So it's not that, but the point is that the budget did not do much about consumption lifting. They were more focused on investment. The implicit assumption was that if you raise investments, you'll raise growth, and the virtuous cycle will also come to consumption. RBI, I think the data also shows that the consumption sentiment in the economy is picking up gradually, but it is way below, I think, the pre-pandemic levels. So in a way, I think what CSO data is telling you, what the RBI's consumption surveys are telling you, I think they are on the same page, so to say. Where the central government's budget is concerned, I think they decided to explicitly not focus on reviving consumption demand, because that would have been more inflationary. And the assumption, as I said, is that the investment-led recovery will be more durable one going ahead.
There might also be a chance that the government has been conservative when it comes to its GDP deflator projection.
Well, I think that assumes an oil price of, I think, 70 to 75. That's the range I think that the economic survey was also working with. Our assumption is that oil will settle at around 80 to 85 in the year 2022. So we do see an upside to that number. And the interesting thing is that while as you mentioned, that the deflator is projected to be around 3.5%. The RBI also sees inflation come down, I think, in 22-23 to 4.5%, which is slightly lower than what the analysts' expectations are. So there is a belief that inflation is going to tread down, and the commodity prices, etc., will also slowly start coming down, and they will reflect in wholesale prices, and they will also reflect in CPI. As a consequence, the deflator will be somewhat lower. But as I said earlier, we do see an upside risk to it, not a downside risk to it.
Keeping the differences in the various projections aside, India will hopefully see a durable and broad-based economic recovery in FY23. However, as things stand at present, energy prices and geopolitical tensions could prove to be spoilers.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.